Hello everyone, good evening and welcome to this week's live weekly trade plan. Now it's Sunday the 11th of February already, and my name's Tim and I'm more than happy to take you through tonight's webinar. So this is a live webinar, and the main purpose of this webinar is to have a multi-time frame look at the financial markets, obviously while they're closed. And this is just quite important because it gives us an opportunity to take stock of what is happening to price action specifically, and then it'll enable us to it'll help us to plan for the week ahead. So we'll be looking to take a technical look at weekly and monthly timeframes and identify the important highs and lows and genuine levels of support resistance that we can use for the trading week ahead. Okay, so without further ado, if we can start as we always do with our risk warning, please make sure, as usual, that you're aware of the risks involved in trading financial markets. Yes, it's inherently risky, but if you take steps to look to protect your capital, then you've got a decent opportunity to make consistent returns. So hopefully you've had a quick moment to read through that. Good to have you with us, guys. Thanks very much. Hope you had a good weekend as well. Okay, so what is the importance of multi-time frame analysis? Just as an intro, we've identified a number of sort of important aspects to having an understanding about the bigger picture. And the first one is you can often see more clearly what is happening and who is genuinely in control of each market. So that just serves as an important tool if we're trying to identify directional bias. Then knowing who's in control and what direction those markets are moving is actually quite important. So it does help with regards to that. Also, the larger the time frame, the more important the genuine levels of resistance comes. So you often get a lot of institutional money entering markets when they identify significant moves in these markets. Number three, it can show you the important levels where a market is likely to move towards as well. If you can identify a weekly or a monthly level, it really has the potential to stop that market in its tracks, and where it gives that market something to consider. And then finally, it can assist with the identification of trend reversals as well. So it does serve a very, very useful function. Okay, let's get straight into the charts then. And we'll start, as we always do, with the dollar index. And I'll just take this away to the downside. So I suppose what we can clearly see on a daily time frame is the market try on a few occasions to make new lows below the 88.23, and we've seen a little bit of reversal off those levels. So from a technical perspective, what we can see is what's called a structural failure. So we've had the market move to the downside. It created a low. The market has bounced back as it normally does organically. And then this is the important part. When it decides to make a new attempt to make a new low, we don't get to see that new low. And we're talking about below the 88.23 level. Instead, the market decides to turn around and starts to create, once it breaks this level, a structural failure above that price, looking to push prices higher. Now, it's interesting to make note of the price action over the last 2 days. These are kind of spinning top sort of doji candlesticks. What that means is indecision. So are we sort of mentally prepared for these markets to potentially pull back and try and attempt these lows again? Absolutely. Could we see a break of these highs and the market push even higher? Absolutely. So all it means is this market is in a state of indecision after 3 or 4 days of quite bullish price action. So that's what this price action means to us as traders. So let's take that information. We'll have a look at it on a bigger time frame. In fact, I'll just come out a little bit more, and you can see the upward moving nature of this market up until January last year, and then a complete turnaround, and the market devalued quite considerably, and now we're just getting a bit of bullish price action. And you can see over the last year or so that there's been very little sort of bullish price action in this move. So very, very interesting position. A lot of the geopolitical factors as well that play a role, can make these markets difficult to read and to gauge. And I suppose that therein lies the beauty and the potential of trading, being technical traders and trading these markets, where we absolutely have a comprehensive understanding of the fundamentals. But in actual fact, if you trade technicals, then you can be a little bit more objective when you enter these markets, which is quite important. Now, something to identify in this market is we'll be moving in the low 90s. We'll be hitting previous levels of support. So all of these levels in here, and you can see there's kind of a downward sort of trending fashion with these lows. So when we do attempt to make a new low, it slightly makes a new one. Obviously, this is a big step down from where we were previously, but now we're coming back to this level, the 91.42. So likely to see a little bit of resistance around this area. So as a result, we're likely to see continuation in the dollar index over the short term. However, we might see a little bit of resistance preventing prices from moving higher above the 91.43. So very, very interesting trading environments recently. I'm sure you're probably aware of what's been happening with the global stock markets. So we'll have a look at those very, very shortly. And just moving on to the monthly time frame. We're having a positive month, but we are only 11 days in to this month. So where does it go from here? We'll obviously wait and see. But as you can see, in terms of last February, ironically, was a positive month before we got this consistent rollover. I think it was around October time. We got a positive month. And so we've only had 3 what you would call positive months in the last 13, 14 months. And this is the 3rd one. So let's see what happens. We're very likely to get a little bit of resistance around the 91.43 level. So what we'll do is we'll take this information, we'll work with the weekly timeframes, and we've clearly bottomed out in this market at the 88.23. So I'm quite happy to leave that low as a very significant low. But if we zoom in just a fraction, we will definitely work with new highs, which is the 90.43, so 9043 level. Okay, so let's put this level in here. 90.430, so that can go in there. So we're working with these highs. And so with that information, then we'd expect to see continuation of some kind. It depends how long that we'll see that continuation for. And as a result, because we've seen a break at that level, we actually decided to buy a couple of dollar pairs, namely the pound dollar and selling the pound dollar and buying the dollar CAD. So therefore, when you get a move in the dollar index and you decide to trade that move, which is what we've decided to do, then you've got to make some decisions in terms of which markets you want to trade. And that is that's why technical analysis can be really quite useful. Okay, so the euro dollar is in there, and we're just seeing the opposite of what you can see on the dollar index. So if I convert this, so we've had a break, a structural failure, a nice, clean and concise structural failure. And again, the last 2 days have been a little bit indecisive. So you'll see the same picture. Sorry, bear with me a second. So we're getting this sort of indecision around this area here. So you're seeing kind of a spinning top. And the likelihood is that this market might be looking to squeeze a little bit lower. Right, there's something wrong here with the actual weekly. Yeah, because we've broken below. Yeah, we're down here. So there's something not quite right. That's a better reflection of the sell-off. So the price is now down at the 22.49, and for some reason we should be down here. So we should see an exact replica of this chart. It's just inverted. So there is the doji candlestick, and there is the bullish. And what we should see on here is the doji stick followed by a bearish candlestick squeezing lower. Now, again, we're going to be running into the 2094. So that's likely to provide a little bit of support. So we're likely to get a push back around those levels. So yeah, that's basically sort of where we're at. That's the pound dollar. So taking it over to the monthly. What we'll do is we'll work with the monthly low, and I appreciate we're only 11 days into the month, but the 2204 is what we will work with, this new level, the 2204 level, 2204. So that can go into there. The pound dollar. So again, this is in the same situation. It's looking bearish, but you know, we did have some news out of the Bank of England with regards to the near-term potential to increase interest rates, although the decision was not now or not yet, should we say, right? Maybe now, if I go back to the euro, we're likely to get the correct price action. There you go. So now it was just to do with a signal and probably the internet connection. So now you can see that weekly level, which I couldn't see previously. Okay, so we are getting this sort of grinding price action lower. So we've now closed beneath the 38.73. Now we would expect continued volatility in this market, and the reason why that's a problem is to do with the risks associated with Brexit, and we would expect to see kind of volatility, swinging moves in this pound dollar pair as a result. But the trade idea was quite simple. This is one of the trades that we decided to trade. The market made a high. We had a bounce back, which you always get with markets, and then it fails to make a new high. So now this is, if this is a high, this is now a lower high, and this is the beginning of a potential reversal. And that's what we see once we get the market breaking beneath this level, which has happened. So now we're looking for opportunities to sell this market. Okay, so so that's what we're seeing. We're seeing this kind of price move. So now we're just looking for, from a purely technical perspective, we're looking to sell this market. So what I'd like to do is to just show you the weekly. So again, it's kind of the same as the euro dollar position, and there's the sell-off. We are likely to run into a little bit of support, a little bit lower down though, which is one of the reasons why we decided to choose this particular market. So we're up at sort of 138, and sort of 136 is where we might be looking to take a bit of profit off this table. Plus we have this ascending line to acknowledge. So let's see what happens. See, it might even push down to the 34.75. So we'll wait and see around this kind of area. Okay, so so what we'll do is we're going to work with these highs, and we're going to change the lows, probably just for this week. So let's change this level. Sorry, let me take note of the low first. So 37.63. So 37.63. So there's the highs and the lows for this market. Okay, so moving swiftly on, another very, very interesting market. And to give you a bit of backstory behind the yen, it is a flight to safety. So what we often find and see and experience is that when the financial markets start taking a move to the downside, you often get investors and traders looking for safe haven currencies, which the yen is viewed as that, and you often get a bit of price action in the yen. But if we pull out, you can see, you know, that we're operating within this interesting little range, and we're at this level again. And you can see on multiple occasions, all we've had is this market sort of moving to the upside, to the downside, upside, downside, upside, and then eventually back to the downside. So what this means to us as traders is quite straightforward. We're kind of in this period of consolidation, meaning it's moving sideways. Now, can there be nice opportunities to buy these markets at these areas? Absolutely, and it's something we'll be looking very, very closely at this week. And again, you know, there's potentially great opportunities to sell these levels as well. So so that's what this recent price action can mean to us. And as you can see, this market literally bounced off the 108. Well, it's the 10800 level effectively. So we got a very aggressive sell-off, and then that bounced off. And to be fair, we're kind of middling at the moment. It's not looking that impressive to the upside or necessarily to the downside at this moment. But below the 108.08 is a pretty significant level. Like I see, there's a lot of air beneath this level, you know, perhaps down to the 105. So we'll just have to trade the conditions as we see them. But definitely very, very interesting moves in the yen. So all we're doing is we'll work with the new low. So I'll take note of the low of this market, and I'm just referring to the bottom left-hand corner of this market, just in case. So we're working with this low. So the 108.03 is the low I'm going to work with for this market. 108.03. As you can see, we're only sort of 25 pips below the previous lows. So that would just indicate to us that potentially this market is game over to the downside for the foreseeable future if we get a confirmed break below the 108.100 level. Okay, so that is the dollar yen. Moving on to the dollar CAD. This is a market in which we're actually currently buying for the same reasons as I've just alluded to, the structural break in the dollar index. It gave us a couple of opportunities to get into a couple of markets, and one of those markets was the dollar CAD. So looking for opportunities to buy it. Friday was looking very, very bullish for most of it, and we've had a little bit of a bit of a pullback on that market. So we're happy to stay with it for the time being, but we might become a little bit impatient with this market depending how the week starts to unfold. So so looking at this price action then on a weekly time frame. So you'd expect continuation, but this pullback here on the weekly is a little bit uncomfortable. Now, it's reasonable to say that we got a pullback at these levels in line with these lows. So really not overly surprised to get a little bit of bounce back off that level. However, a break above these highs would constitute, we'd be attacking these highs again, sort of the 129. So it has real nice potential upside on a weekly time frame. What that would mean as well is a structural failure on a weekly time frame, which would give us a fantastic opportunity to perhaps stay into this trade for the longer term. So we do have to overcome a couple of significant sort of major levels, and this high, or should I say last week's high, is one of them. And if we get over that and we start seeing these prices squeeze higher, then we are definitely good to stay into this trade. Okay, so that is the weekly. So what I'd like to do is we can change these levels completely. So I'm working with the high, the 126.84. So I'll just change this level in here, 126.84, and that is the high, and we'll take a note of the low as well for consistency purposes. So we're looking at 23.96. So 23.96. So this level is, those are the weekly highs and the weekly lows. Okay, so so that is the dollar CAD. Moving on to the Aussie dollar, you can see this complete pullback off the highs of 8,100. It's a pullback. It's like this kind of pullback that just kept going and going and going. This is the same, but just in reverse. So it doesn't necessarily give you opportunities to get into it. It just keeps coming back on a daily basis, keeps plummeting lower. And the market did bounce off, you know, a pretty significant level in line with these highs. And these levels have been in these markets for quite some time. So And you can see even the price action coming back to the 77.80 level. You can see that this market is struggling to break below that level. So so that is the Aussie dollar. Let's have a look at it in the weekly time frame. So we're getting a bit of pullback. Would we expect to see continuation? I guess the answer is yes, but we need to be very mindful that we are running into a major level of support. And if we get a turnaround trade, you know, to actually look to squeeze this market a little bit higher, then we might look to take that. So if we're in this channel, so it has potential to push lower as well. So that's what we'll be looking for, and maybe look to buy it at a much lower price, you know, to start pushing up to the low 80s. So clearly this market is going in that direction unless something significant changes. So that is the Aussie dollar. So what we'll do is on a weekly time frame, we'll work with the highs and the lows. So the high of this market is 79.52. So I'm going to put a level in there. Whoops. So I'll leave that level down there for just a second. So we'll change this. I think it was 79.52 I mentioned. Yes, that's correct. I'll just double check it. Yeah, 79.52. And to the downside, we're working with the 77.57. 77.57 level. So you can see how accurate we like to be. And what I need to do as well is to just change this color. So we'll change this to a nice solid, oops, sorry, no, a green for the weekly levels. So we've got a weekly high of 79.52 and a weekly low of 77.57. Okay. So moving swiftly on then, the euro yen. This is an interesting market because, as you can see, we've experienced a pretty dramatic pullback off the weekly high, which is 137.48, and a really sort of significant move lower as well. Not surprising to see, just because of what's been happening elsewhere in other markets, i.e. the stock markets, but there's clearly been a flight to safety over the last week, and that's what we're seeing with this price action. Okay, so with that in mind, what I'm going to do is, and if we look at it on a weekly time frame, you'll see what I mean. We're going to work with the weekly highs, but we've now sort of closed beneath this ascending line, and there's also a 132.94 in there as well. So actually, if we get a confirmed break below this low of 131.97, 131.97, 131.97, then we're likely to get a continuation to the downside, and it will clear all these lows as well, and it would give us a very interesting trade to the downside. The pound dollar, sorry, the euro pound, should I say. So like, just from a technical perspective, this is what we're seeing. We're seeing kind of a downward kind of pressure in this market. And don't forget, this is the euro pound. So, you know, Brexit negotiations and what's going on in Europe is playing out in front of us. And it kind of reflects the indecision that we're reading about on a daily basis. You know, do the British government have their stuff together and, you know, making progress? Well, there's lots of indecision about that, and people are, you know, a bit unhappy about how fast things are moving. And in fact, this is playing out in the euro pound. So we're just getting range bound, however, ever so slightly to the downside. So there's this constant little downward pressure applied on these markets, and you can see it just here again recently. So it depends whether we get a breakout of these lows. And again, to the downside, there's sort of marginal lows made in these markets as well. So you're getting this slightly downward moving price action as well. So we're still going to work within the 90-30 to the upside and the 86 to the downside. And all this market needs is a considerable amount of patience. And we do appreciate it is considerable. It's not insignificant by any stretch. So the market, we're going to have to just be, like I said, just be patient for now, and we'll work with these levels. Okay, so moving on to the very interesting global indices. So we'll have a look at the global stock markets, and we are just seeing catastrophe in front of our eyes in many extents. So some of the reasons why we've been very sort of nervous over the last 6-8 months in trading, the S&P, was because we were constantly trading all-time highs. The problem with that is, as we've alluded to, as I know we've been stuck to this line for quite some time, and I'm sure many of you are bored of it. And I know we've discussed it with you on many occasions, even on a one-to-one basis. But some of the problems, and with our experience, having traded for over 40 years between us, we've seen all these moves before. And to impart a little bit of sort of experience is that these markets can fall off very, very quickly, very, very sharply. And unless you are very finely tuned with your risk management approach, these kinds of moves can be devastating to an average retail trader. So although this market continued to defy common sense and logic to the upside, and this is off the back of one of the most, let's look at it on a monthly time frame. Last month was one of the biggest months that this market has seen for quite some time, and this was at the very, very top of a major bull market for quite some time. So since 2008, we've been in this sort of bull market to the upside. So is it a problem that the market comes off 10%? I suppose the reality is no, not really, not as such. It's the speed of the move that's probably more concerning, and that's why we're getting a lot of these bad news stories about these markets. What's likely to happen is we'll be up at all-time highs probably relatively soon. What we would need to see first is a little bit of consolidation, creating a base. Then under those circumstances, this just becomes a kind of a minor correction, and might provide serious potential value at these much lower levels in order to capitalize on the next run to the upside. But it's just a sharp, snappy move to the downside that's obviously a little bit frightening. And I'm sure there's a lot of traders that have got caught in these moves, looking to continue to make new highs, and then these markets roll over. Any trader that has been trying to trade this to the upside, and they've been successful for 10 years, can get very, very badly burned in a very, very short period of time. And then that just lends itself to the importance of risk management. Are you protecting your capital? Because if you're not, a move like this will absolutely take its toll financially. Okay, so this is the S&P. So really, it's kind of arbitrary. It's not really, there's probably no sort of significant point to this, but for consistency purposes, let's work with this weekly high of 2762. So 2762, 762, and to the downside, we're going to work with, and you can see that it straddles our levels. This is an ascending channel, meaning prices moving to the upside, and you can see the high is just outside it, and you can see the low is just beneath that. So it's quite unusual price action, but it does reflect the amount of panic that exists out there as well. So the low 25.29. Whoops, excuse me, let me zoom in. Sorry, bear with me just a second. So 25.29 to the downside, and I might have to just amend the upside just briefly. 27.62. 27.62. So we'll work with these levels. We need the market to sort of stop being so irrational and actually, potentially give us some opportunities, maybe on a daily level to consolidate for a period. And then if we get a turnaround, we might look for opportunities to buy this market. So actually the same analysis exists. So what we'll do is we'll work with the high of 25.474, 25.474, 25.474 level goes in there, and to the downside 23.049. So let's change that, 23.049. Those are those levels there, and this is the Dow Jones. So again, the same principle applies. Let's have a look at this market. This has been sort of looking a little bit bearish for a little bit longer. Actually, don't forget the US stock markets have been like this for like 2 weeks. Perhaps another 3 or 4 weeks we've seen a little bit. So this was definitely one of the first markets to start to come off and provide a little bit of hesitation to the downside. But as you can see, the size of the moves are quite significant, let's say. And we've seen continuation. So again, the same sort of potential applies. And we've even seen a gap down to where this market effectively opened lower. So we're talking about the weekly low of 73.34 and actually opened close to 72.76. But what happened before the market started to squeeze lower was we got a little bit of pushback back to the previous lows. So that's the nature of support and resistance, and then the market rolled over to the downside. So we're just going to take note of these lows, these highs and lows, and we'll make those decisions accordingly. So let's work to the downside at 68.57. So 68.57. So that's to the downside, and to the upside, we'll take note of the 73.31. The 73.31. So we'll put that level in there to the upside and to the downside. And just to be clear again, these are not necessarily buying levels or selling levels. We can actually trade within these levels up to those levels or whatever the case may be. What these levels do is they indicate to us that we can have additional confirmation in some of the trades we take to know that these levels, these markets are trading above or below sort of significant weekly or monthly levels, and it adds to the overall impression and confidence of each trade. Okay, so the Nasdaq, again, exactly the same position. We've had a 2-week sell-off, bearish engulfing, followed by continuation to the downside. So again, a large range. This pullback is a little bit unerring. Are we likely to see continuation? Unfortunately, the answer is yes, potentially. Now, it depends whether participants in this market view these levels as actually quite attractive. If that's the case, we might get a lot of buying coming into these markets fairly quickly. So let's look at it on the weekly time frame then. So we'll work with the highs and the lows. So the high of this market is 68.12. So I'll just change that, 68.12. 68.12. 25. And to the downside, we'll work with the levels 61.63. So we have 61.63. Okay. So those levels are in there. So moving on to the commodity markets now, we're seeing, the gold markets come off to the downside. So what is interesting about this move is the 1303 level is a very, very important level in these markets. Now we've had a fairly clean, consistent break through that level, and then we got a lot of buying pressure coming in. Now there's other levels beneath that. In fact, this whole area here is just support and resistance, and it goes back, decades. So these are very, very important levels that the market respects, and we've seen the market sort of bounce off that already. Now it looks like we're attacking it a little bit lower, but we don't want to sell a market going into 1303. We kind of want to sell it below 1294 if we can. We appreciate we're kind of leaving potentially this much potential profit on the table, but we've traded these levels many, many times over the years, and we know how price acts and behaves around these levels. So we have to take note of them. They're very important levels. And yeah, so that is the gold market. So looking at the weekly time frame then, so a two-week pullback off previous highs, which coincided with all of these levels in here. So we can absolutely work with these weekly highs and lows, which is 1345 to the upside. Is that level, and to the downside we're going to work with 1306.90. So 1306.90. Okay, so we're working with the high of 1345, quite a large range, but it does kind of reflect a lot of the incredible moves we've seen over the last week. So 1345 and 1306. So we would expect continuation, but like I said, we're continuing into major levels of support and resistance, and you can see how these markets have behaved around these levels just over the last year. So important levels to take note of. The crude oil has had a major sell-off. So we've had a structural failure followed by a weekly break to the downside, and we've just had continuation. Again, kind of the geopolitical kind of environment, we're not surprised to see this market sell off the way that it has. We are looking for opportunities and continued opportunities to buy this market. So when we see a sharp sell-off like that, it actually looks quite attractive to us to look for opportunities to get in at a much lower price. So so that's really, we're happy to let this run. And look to, if we can get in around $58, we'd be happy with that, because that would mean a significant opportunity to the upside. So this all lends itself to the whole approach, which is, have an understanding in terms of what direction you're looking to trade this market, and look to capture as many of those opportunities as you possibly can as the market is moving in your direction, unless something significant changes. So so that's our approach there with the crude oil. Just taking it over to the weekly, you see a major sort of reversal last week, coming into some support. So that's why if we get an opportunity around the $58 level, it could be a bit of a no-brainer buy, and see if we get these prices squeezing up over the next weeks and months. So so we're just going to work with actually changing the low. So the previous high we're quite happy to work with. The low definitely needs a bit of revamping. So 58.06. So let's put 58.06 in there. So that's the levels for the crude oil: 66.63 to the upside and 58.06 to the downside, and that would add a bit more confirmation to you. Okay, so just to the last market, you can see we've been very range bound within this market. We were selling it up until this sort of explosive move to the upside over 2 days, which then reversed. So that's what you can get, and that's why we were very anxious to book in profit as the market was moving for us. So we were able to book in profit around the 121 level. So we didn't have to expose all this much capital to this market. So that kind of worked in our favor, because it did save a little bit of capital. But as you can see, is our bias still to the downside? Yes, of course it is. And this is still how things lie. Thursdays, we tried to make a new low, and then that was rejected. And then Friday, we tried to make a new high, and that was also rejected. So, quite choppy, quite unnerving price action because of the type of week, the volatile week that we had. We're not overly surprised, but we can be nice and patient and look for those next opportunities to get in. Now, we are still short, as you can see, the EURBUND. So we're going to continue that. We've seen the same price action, rejections to the downside, rejections to the upside. So let's see who plays out and who is ultimately the winner in this move. But we are very happy and very comfortable to be selling these markets. At the moment, we would expect continuation to the downside. And it might be an opportunity for us to get into this market beneath these lows. So what we will do on the weekly time frame, and look, that's a horrible rejection on a weekly time frame. So would we expect continuation? Yes, we would. So we're going to take a note of these lows. We've just had a big sort of just a day or two of really volatile, very erratic price action. And as you can see, even all of those moves sold off, to a pretty significant extent. So let's work with a new high of 122.56. 122.56. And let's work with a new low of 120.52. 120.52. Fantastic. Okay, so those levels are in there. And that just about wraps it up for this evening, guys. So, fairly short and sweet, 45 minutes. We're able to get everything covered. So those are all the levels, and we look to post those levels tomorrow on Facebook as well, so you can access them. But if there is any questions, guys, now is a good time to post them into your chat box. If you'd like to follow us on Facebook, Twitter, and LinkedIn, please do. The details are there. And any questions, feel free to post them into your chat box. If you do need to shoot off, that's absolutely fine. Thank you all indeed for joining us. And this webinar will be posted into your webinar, into your members area, normally within the next hour or two. So you'll have that there ready for you if you need it. And all this session does is it informs us for the week ahead. So it can give you some triggers and some interesting levels to add to your trading to try and give you a little bit more confidence within those trades. Okay, let me see. So it looks by and large that all of you are looking to shoot on, so that's good news. I mean, if you do have questions, feel free to post them, but thanks very much for joining us. Do shoot off. Have a great weekend too. So on that note, I'm quite happy to effectively wrap it up. I don't believe we've got any questions coming through. Just lots of comments from you all. So on that note, thank you very much for joining us. This webinar will be placed into your members login area shortly. So from everyone here, continue to have a good weekend, and let's see what this trading week is going to bring us. It could be very interesting. So hopefully we'll see you in our live trade rooms during the week. So from everyone here at the live trade room, take care and speak soon. Bye for now.